The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 24th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magical, Magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 185 points. That's about 0.7% to the downside. S&P's off 15. That's 0.5% to the downside. NDX 100 barely a budge, off 8 points, 0.1%. Russell's down 13 points. Semis are off 1 point. Trannies are down 1.6%. That's what's taken the biggest hit, dollar-wise and percentage-wise, 186 points to the downside. Spot volatility index up is 9.4% right now. That's straight out of 1278. It's up $1.10. Silver's up $3. Gold is up $3. How about that? Silver's up $3. If that happens, folks, that'll be kind of interesting. But anyway, it's gold that's up $3.50. No big deal in the metals complex. Light sweet crude up $1.30. That's nearly 2%. The upside leading the charge here to the upside. It's at ABMD, ABIOMed, up $29 or nearly 8%. Edwards Life Sciences up 11. About 7.5% there. Netflix up 11. Booking Holdings up 10. Biorad Labs up about 10. Align Technologies up 9. To the downside, it's at Tilray Monster off $16, down 113%, I should say. Trade out at 106. Equinix down nearly $12, trading out at $4.29. You've got Roper Technologies off 2% or $6. So we've got some things to look for. Of course, I want to look at what you want to look at. And the first question really came in from, not really, it did, from Susan. And Susan, I got to paraphrase because it's not on my phone right now. Or it is, I can't, the next time I'll look it up. But in essence, what Susan was asking me, if I could go show her, because she uses channel lines and trend lines and things, so vertical and horizontal levels of support and resistance, and asked if I would draw in what my levels of horizontal and vertical support and resistance are for the S&P and for the Dow. So let's go through that process. I actually drew some stuff in ahead of time, just to make it a little bit more efficient, so we didn't spend the entire day doing that. So let's start with taking a look at the Dow itself. First, with regard to the Dow, let's come back here. Before we even start here, with regard to the Dow, I actually have the diamonds up on my I did. There we go. I have the diamonds up on my screen. So here's what we know about the Dow diamonds at this stage here. The first high that we're looking at, we're going back, and usually kind of as a benchmark, January 26. On January 26, you had the diamonds at 265.93. On that trading session, that was the previous all-time high, there were about 3.8 million shares. When price moved and closed above that, it was on the trading day of September 20th with volume. Yeah, crossing a swing point with volume, 5.2 million shares. Now we're talking Friday. We're talking on Thursday, gap to the upside. Right now, what we can see, and so the question is, and this is going to be an important week, will the Dow Diamonds, will it be able to hold above that January 28th, 29th, 26th? Not even close. We'll be able to hold above that 26 level out there. Because if it can't do that, it had volume as it passed that level, then we've got some kind of retracement. Now, I believe that's where Susan may have been going with regard to the channel lines and horizontal levels of support. Right now, you can see prices trading with light volume as we speak. I'll use that light volume from the standpoint we're at about 2.3 million shares versus busting through with 5.6, 5.2. It's always best just to look at the facts. You can see the memory's off just a tad today. So right now, prices pulling back. 265.93, I think, is going to be the key level to watch at the end of the week, if not right now. Why? Because if price closes back underneath there, then we may have a good old-fashioned consolidation. I'm not talking about the kind of consolidation where price goes back into the April lows out here, that April 2nd level. Inside the Dow Diamonds, that's 233.20. We won't see that price again in our lifetime. Major bottom Rooney is what occurred down there. Now, let's go take a look at these. Okay, see, I already have the Dow up here. So we've got the Dow Cash Indice, and I happen to have some horizontal trading range levels out here. Now, the horizontal trading ranges, what these are doing is they're identifying. So here's the work that I've taken, in essence, from what I learned from Bud Rolfs, which was to take a chart, put as much data on it as you can within reason, and then begin to look for the largest number of co-located opens and closes. Now, on this chart here, Susan, that happens to be the red dashed lines out there at 8901.63 and 10,500. Now, here's the caveat. It depends when Actually, it depends how much data I put on my chart out here. By the way, at those levels, there were 39 opens and or closes at the price point of $10,499. Let's call it $10,500. There were 14 opens or closes on a monthly basis, by the way. So we're looking at monthly data, and that next level was 8,900. But it depends on where I begin my start point. For example, on this chart here that we're looking at, I began in April of 1997 as my beginning point out here. And I did that just to be able to have some relevance. April of 1997, right around here where my cursor is at, and just looking for co-located number. You know, you're just looking for where there's the preponderance of evidence of these resting points. Resting points being the body of the candle. Oh, okay, I got that out. So if, in fact, we use these levels, if we begin again in April of 1997, I believe that's what it was, here's what we can see. So with regard to the consolidation, if there is a pullback, if the Dow, in essence, on this case here, says a close below 26,482, we're trading at 26,563. Then what price could do or should do is pull back to the bottom of that next horizontal trading range, right around 24,883. We didn't get very far in this exercise, did we? It's just Stevie, just talking, yakking away. When we come back, we're going to finish this exercise, though, and continue looking at the markets. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So we're taking a look at the Dow for Susan, and we've gotten the horizontal trading range levels out here. We use these as guidelines. I don't want you to use these numbers as, as exact, but it helps us to identify logical areas of support and resistance. Let's go take a look at logical areas if we can, using the monthly chart for the channel lines out here. So if I were going to draw monthly channel lines, which I have, I would go back to the 2009 timeframe. Now, what we also learned here, or what I learned here with regard to trying to identify these horizontal or vertical levels of support and resistance, was again to try to find the largest number of co-located opens and closes. So I'm not drawing a trend line here. I'm drawing a channel line. And by channels, what we're doing is we're just looking at the actual body of the candle. You and I are not interested in the upper and lower shadows or the upper lower wicks on a candle. We can draw trend lines, but that is not what Susan asked me to do out here. So here's where I would show the levels on a monthly basis with regard to our horizontal trading range and our channel lines. Now, you might be looking at this and saying, wait a minute, Steve, but what happens is you had a rising price channel, price breaks above that. There's got to be something else there. And I would say, well, you're right. Just like on the horizontal levels, we keep adding the same equidistant price between the channel lines horizontal-wise in order to keep adding where these different levels of support or resistance are. We do the same thing when it comes to the vertical aspect. So here, if I draw the next line out here, the same equidistant space, there becomes where we see our next channel. And we can see that price right now is trading above that level. So if it stays above that level, and if you're going to ask me where is that level today, it's probably right around 26,200, give or take out there. So I would say, what would I say? I would say that, hey, at around 26.2, if price were to close below that inside the Dow, then price could come back inside this little consolidation to about the 24.8 level out here. We can also take a look at that channel line. We can draw one more. We can draw as many as we want up top here. And if price is able to stay above the 26,480 area, then price is headed to 28,000, 29,000, 30,000. You know, it'll target both the horizontal trading range level as well as the top of that rising price channel. Now, that's taking a look at all this on a monthly standpoint out here. If I switch the chart to weekly, I would be drawing, Susan, some different channel lines. I would draw my channel lines like this. So here's the yellow, and what I've done here is I've just started back at the 2016 level. Why 2016? Well, because we had a low back in August of 2015. In essence, that low was tested. It was tested both in January as well as March, or February, I should say, February of 2016. So what's price done since then? So the yellow diagonal lines, and I've gone ahead and I've drawn all of the quadrants out here. What we can see is price right now from a weekly standpoint is really pulling back to a level of support, the 26,483, as well as testing, because last week price broke above. We haven't been above that price channel level since March of 2018. So if price can hold this area, price right now just testing support, that supports price moving up to the 28,000 level. The bottom of the channel on a weekly basis is probably right around 25,250. So maybe price never does get back in that 24,885 level. We can also look at things on a daily basis. So if I switch to the daily time frame, and not to confuse you or anything, but Susan, you didn't really give me the time frame, so I just took the time to go ahead and say, well, look, there's different channel lines depending upon which data you want to use. The same is true with regard to the horizontal trading ranges out here. So at this stage of the game, this is what I would be using. I'm coming back in essence. I really drew the channel lines. I was beginning with the channel lines down at the low, the body of the candle from March 23rd, 2018. Now I backed things up. What I mean, I kind of moved these channels a little further. Once I had in essence, the two channel lines drawn, the bottom one and then the one that's next up from there, I would just simply added, the next levels out here. So that's what I see when I take a look at the Dow. Now, if you were to ask me, hey, what's the Dow doing? We can see that it's pulling back. Where is it going to target? I would look at the daily time frame chart, and here it is, and we'd be looking at Stevie's green line. And that price point as we speak right now, Susan, is 26,470, right around there. So a pullback, and today is going to end up being a Tom DeMark setup 9 count on the Dow Cash Indice out here. Unless the close is just simply so horrible, then it won't be. But as we speak right now, it looks to me like that's what it will do, is form a Tom DeMark setup 9 count. The 9 count, or right around there, can be the extension of a move. Is that it? I don't know. 26,470 becomes the next level of support, Stevie's green line. What it would also do is switch from here. First of all, I'd say, okay, well, if that's the case, what's the Dow doing in global currencies out here? And look, folks, none of what you and I are doing right now changes our outlook or changes my outlook or changes the outlook of the chart data that I provided to you last week, the week before, and so forth, and that the Dow is entering a brand new plateau of pricing. It'll be confirmed this coming Friday. Be confirmed if price is able to hold above those January highs. If not, then it still has some more work to be done to the sideways, downside-ish, top-ish area. This is the consolidation that we're in right now. If we look for some data, some information about market profiles, here what you're going to see inside the Dow is the next level of support. If Stevie's red line or green line gets broken through, and by the way, inside the Dow Equity Futures contract, it's 26,517. Or 26,518, right around there. That's the number to be watching. Coming in, touching that level and bouncing off it was nothing more than a retracement back to support. There's nothing in here right now that I see inside the charts that suggests that what we're seeing today is anything more than just a normal retracement back to support. We looked at volume. We saw the high volume a couple on Thursday inside the Dow Diamonds, and today right now as of 125, kind of lightish type volume. We won't know until the end of the day. But 26,169 would be another level of support. Looking at the Dow equity futures contract. So lastly, we're going to take a look at what's going on with regard to the Dow and other major currencies. Is there anything significant that we see here? We're looking at the Dow in dollars, the left-hand side, the Dow in euros next to it, the Dow in yen, and the Dow in Great British pounds. There's no levels of there's no swing points, key swing points, or anything that have been busted through. So I can share with you that traders around the globe, they're not worried at this stage of the game. So what we have going on right now is your garden variety type of retracement. I know you also asked me about the S&P 500, Susan, and if we have time during the show, we'll go through that as well. But when we get back from this first break, we're going to go spend some time with Mike in Ormond Beach as we take a look at General Electric. We're going to go look at the General. But right now, we're about ready to go to a hard break. It's always great to be back with you on a wonderful Monday. This is Steve Rhodes with TFNN. Dow's off 176. S&P is down 13. Again, when we get back from this break, we're going to go look at General Electric.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go to Ormond Beach, speak with Mike. Mike, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing pretty good. I shorted GE around 1260, and I was wondering if you think we could get down to around 11.05 to like 11.15. And I came up with that price using trading range boundaries because the last two consolidations we had, it seemed like it would move like about $1. So I wanted to know with your TAS profiles, what you came up with, where you think I should cover GE short.
Well, interesting question that you've posed. And since you've posed it, let me see here if I can add my trading range boundary lines to this chart here. Now, I'm just going back to the historical data, which may throw things off here and might require some adjustments. But unadjusted wise, let me just simply go ahead and put those in. We'll just use them kind of like from a green standpoint. And what I'm going to do is just take a look at, because it's a monthly time frame that I've got up here, and so we're just going to look at the monthly time frames. And right now, price is right at kind of a midpoint on a monthly basis. That price point would be 1164, and we're trading right now right around 1170. And the low's been 1160. Now, I'm not saying, Mike, that this is going to be support, but since you brought up horizontal trading range levels out here, and I just apply the automated tool to this. And here what I'm doing is I've got both the midpoint lines, the solid lines on my screen represent the primaries, and then the midpoints are the little dashed lines out here. And by the way, at 1164, there's never been a closing, so to speak, ish. But just to, now, what this does suggest to you, though, is let's say on your short side, your short trade, what this would tell me is if price continues lower, you would be looking in the $8 range, which I think is below what you were targeting. And the $8 range comes from using this tool, and that is where the largest number of co-located opens and closes is. And it's all really because of the trading between 1993 and 1995, when it was really in just a tight range out there. But now if I go back, because I know you'd also mentioned the TAS market profiles. First, with regard to the TAS market profiles, there is no support inside of GE. Whether it's daily, weekly, or monthly, everything is below a level of support. The last level of support on the monthly was 1395. What I would also just kind of throw out to you is that if we just were using the art of timing the trade, and we're using, one of the tools that Tom O'Brien loves to use, which is a high volume candle. In the case of General Electric, the March 2009 bottom was its high volume candle. And the top of that is 1135. So you're at 1169. Now, it doesn't mean that price is going to just test and reject that, but it does have a lot of volume, nearly 6 billion shares. For the month, it's the 24th, right? So even with the next 4 or 5 trading days here, there's no way it's going to get even close to a billion in volume. I don't know if that is where people are going to find value or not. My concern or caution is that you're in such a, in order for you to really capitalize on a $12 short, so to speak, I mean, this thing has just got, there's so much risk. There's so much more risk in my mind to the upside than there is to the downside that I just always kind of throw. It's not that you're wrong on the trade, but it's just what could take place. Could GE, because of what's going on there, could they sell some unit, whatever that might be? So something non-technical. Could they make some fundamental shift that all of a sudden, you see General Electric shoot up by 10%, $1.70 or $11.10 or something like that. Right. I don't know. So you're coming into, the trade looks pretty good. So it's just the caveat emptor, so to speak. You've got to watch this 1135 area because that is a high volume low. Now, if it closes inside that, Mike, it says you could go test the bottom, which gets you into the 573 level. But, man, I don't know. What do you think? Well, I know you're short, and you shorted it. Why? Well, so what's you're an astute trader for sure. So what was the thought process? And look, you have passed on a daily basis. Let's just make sure, because we were talking volume out there. You have passed a swing point with volume, and that's the August 15th level, which had 64 million shares. You're already 84 million shares today, and the small A to B equals CD out here, and I'm using the conservative one, would take you down into what looks like a price point of about 1128. That's the 1-to-1 or 1081. So kind of share with me what were you looking at as a reason to take this thing short, and just so I can just share that.
Well, I was looking at the different like for the last year or two. I don't have the chart in front of me right now.
That's okay.
But it set up like 2 trading ranges, and it seemed like each trading range was roughly $1. And I don't know, it looked to me like it was going to break the $12 mark. I have a couple of different moving averages that I use on my charts.
Sure.
And it broke one of those, and so usually if it breaks through that moving average, usually it'll start heading down. So.
Okay, and what's your price target again? So your price target on this trade takes you to where is it that you have a setup to perhaps exit the trade?
Around 1120.
Okay. Well, look, 1128 is your 1-to-1 A to B equals CD. You've had a pretty nice move off of that C point, which was about a 0.618 retracement. I'm just looking at the small A to B equals CD. So I think that is as logical as anything, especially with today's volume. I would think you would even get down towards 1081. This would be an expansion of that A to B equals CD because of the volume selling that's going on today. So yeah, I mean, I can certainly see that. I just think you got to be careful, based on coming into that high volume monthly bar. But yeah, I'm not suggesting that you. The other thing that I'm just a little bit of word of caution at this stage here is this has been pushing lower, doing with less relative strength right now. Even today's move down here. And so that's always one of those things where you got to be careful. If you see a bullish candle show up, at that stage I would go ahead and I'd take whatever profits are remaining.
Yep.
Okay.
Yeah, I'll be out. So, all right. Well, thank you. And one other thing, something else that I use too, like what Basil teaches about stochastics, and I look at my stocks on a weekly and a daily, and I kind of use the stochastics as a guideline too to my trades, and that's something that has really helped me out too, because it shows the momentum of the trend, and it shows the cycle of the stock move on like a weekly and a daily basis. And I use that as a backup indicator, and that's another reason too why I decided to.
Look, I think stochastics are a great tool. You always want to have one momentum indicator and master that. And if that's the tool that you've mastered, congrats to you. So whether it's just stochastics or the Williams accumulation distribution or the CCI or the relative strength index, just use one of them, master that, and you're all set. Hey, we're headed into a commercial here. Mike, always good to talk to you. Best of luck on this trade. Steve Rhodes with TFNN. You bet. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. So the question inside the Tiger's Den earlier, and we gave one of these things away, levels away, was if we could. The question is, what are the key levels of support for the ES, the Dow Equity Futures Contract, and the NQ on this pullback? And so we took a look at Stevie's green line inside the YM, and we also looked at the TAS market profiles, which also show up here on the screen. By the way, they may be slightly different, but 26,261 would be on this level here. Now, you have to realize that price in the Dow, in the NASDAQ, and in the ES Mini are all above the tops of their market profiles. And so it is the top of those market profiles that becomes support in this case here. Inside the ES Mini, you're looking at 29.14 and 2 ticks, I'd call it, 50. So 29.14.50. The NQ 75.41. 70, the Dow 26,261. Those would be the levels. Those are levels of support. If price closes back underneath those areas, then you start looking at the center of the box, the point of control, or the bottom of that level. But right now, you have signals at 1:43 in the afternoon, even though there's a pullback going on. It's nothing more than, as I said, your garden variety retracement out there, because price hasn't moved down below a key level of support. Now, inside the NQ, it's only 50% true. In other words, price is trading above the top of its box. But what it's not done just yet is it's trading below Stevie's green line out there, that oscillator and change line. 75.87, give or take, is the level. But if price closes over 75.87, it's certainly the high of Friday out there, that this thing is headed back to its highs. Do I know that for sure? Of course not. But that would most certainly be the read. Why would that be the read? Because you're trading above resistance. The resistance, which would be the top of the box, the resistance, which would be Stevie's green line, and the resistance, Friday's dark cloud cover candle. Old resistance becomes new support as you go back into its all-time high. So this thing, NQ, and I hear people trash and thrash it and say, the Dow's at new all-time highs and the S&P is new all-time highs, but the NASDAQ isn't. All right, so if the NASDAQ is, then you're going to jump on board this bullish train? No, that's not the case. That's not typically the way it is. Like, it's just a different group of traders out there. And you look, that's really it. That's really it. It's just got categories. We're just kind of called categories. Okay, here's the deal. I know you each associate with your friends out there, whether it's dinner, whether it's at clubs, whether it's playing tennis or golf or whatever it is. Okay, I can share with you, there are very few people that say to me, hey, Steve, what do you think of that Boeing Airlines? Or what do you think of that Coca-Cola? Or basically what I'm saying, with the exception of really Apple out there, no one is talking to me about the Dow 30 stocks. When I say no one, I'm referring to individuals, just basically individual traders. Doesn't make them bad, indifferent, or what have you. And if you're younger, you're definitely not talking to me about the stocks inside the Dow. What the conversation is what do you think about NVIDIA, Netflix, Google, just stocks like that are making up the NASDAQ. So the NASDAQ, in essence, if we can think about it, is really representing the time frame, the mind time, if you will, of the individual trader. All that means is that the individual trader hasn't bought into the fact that the Dow has now created this new shift, this new paradigm shift in price. Those April lows are never going to be tested. We're going to see prices move higher for long periods of time to come. It just means that they haven't. Whereas in the S&P 500, and you guys know this, if you're professional money managers out there, you're focused on the S&P 500 or the sectors inside the S&P 500, so you know that's representing that large institutional money. Well, what took place last week? The S&P got to new all-time highs. The Dow is basically just that big international money, and that's what's really important out here. You know what? And it's important because of its because of the mindset, what do I want to say? The mindset, the momentum, the philosophy, that's the big international money. What's going on there? If we took a look at the Dow out here, let me see if I go back to it. We already did that. We looked at the Dow in all the major currencies. There's no smidgen of concern out there with regard to what the Dow is doing inside of So the big money between the Dow and the S&P 500, new all-time highs in major currencies. You can't overcome what the money is doing. You've got to show me the money. Look, I know that this is new to most all of us out there, but if we just stop for a moment and we just realize that money is always being parked somewhere, and that you and I just need to be that Inspector Clouseau, maybe not the bumbling, guy like that, although he always got his prize out there. So, but we could be the Sherlock Holmes, and it is not that complicated. There's only so many places that money is going to go. We can look at the basket of commodities out there. We can take a look at currencies and where things are moving higher or lower. We can take a look at the indices around the globe. You can do it via ETFs. It's really not that complicated. You just have to have access to the data and then go ahead and run the charts out there. And money's going to continue flowing until it doesn't. I mean, and right now, we're not dealing with the until it doesn't when we take a look at the U.S. stock market. So with regard to the ES Mini, I think that was the next question. Where are the levels of support there? Eventually I'll get back. If you give me just enough rope, I'll eventually get back to the question that was in hand. Now what I've got to do is just simply find it. Where did I put that out here? I think it's, there we go. Well, we're sitting here right on it. It's on my screen. So with regard to the ES Mini, the support there would be that 29.14 level. The only difference here is that the ES Mini, so even though I went through all of that bloviating out there, the ES Mini is the one that right now is in jeopardy of suggesting that price wants to pull back even further out here. It formed a Tom to Mark setup 9 count. It did that on Friday. Price is moving higher, doing less relative energy. We see that because Stevie's system automatically draws those lines. And right now, price is trading below Stevie's green line. That's at like 29.28 is the number. The real number right now is 29.2756, but we'll just use 29.28. And if price in the ES Mini closed below 29.28, then there's no reason that price can't pull back to 28.96 out there. That's another, what, 23, 27 points or something. It's really not that huge of a deal out there with regard, but that would become your price targets with regard to, now you've got them for the ES Mini, the NQ, and the Dow. So I hope that helps you out. We've got a question here from AJ. AJ says, could you give me your analysis on IVR for long-term hold, at least 1 year? I just went in ex-dividend today. So let's go take a look at the IVR out here, see what it is suggesting to us. Let's go take a look at the 3 time frame analysis, and that's Invesco Mortgage Capital Inc. So you went ahead and you bought it today as this thing started cratering to the downside. So when we get back from this break, we're going to take a look at levels of support, see if we can find them, see if today was it, and where this thing might head to over the course of the next year. Steve Rhodes with TFNN. Be right.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Okay, Maybe AJ's not actually in this trade. I can't tell for sure. You know, I do the best I can to read the messages thoroughly. But in any event, the question really was, what is it that I see inside of Invesco Mortgage Capital Inc.? And what I see today, I don't like out here. And that is that prices traded. First of all, prices trading back into its swing point from the trading day of February 6th. The high there is 1588. There has only been, in essence, I will have to say, since about March of this year, we've only seen it close inside that swing point once. We've seen it tested. The once was June 27th. And the very next day, price got back above that swing point. So if it doesn't get back above that swing point tomorrow, it says to me where this is going is 1515. Now, whether it's going to hold that level of support or bust through it, I don't know. Volume there is about 3 million shares. You're about 800,000 today. So it's kind of pulling back with light volume. But if you close inside a swing point, with volume or not, you can easily go test, in this case here, the bottom of it. So I'd say 1515. At this stage, this has been a consolidation to the upside, AJ. And so the 16, 1650, 60, somewhere like that, there's nothing here to indicate to you or I that this is going to take out that level. So if you're looking to get into this, I'd say wait for the 1515 test and then make a decision then. You also had a question about the AGNC out here. If we take a look at that, that's AGNC Investment Corp. At least this is a daily time frame chart out here. At least in this equity right now, it's trading inside a new daily profile, but it's got resistance at 1894. I wouldn't be taking a long trade in this until it broke above that. When I say break, I mean close above 1894. This thing is not telling us whether 1873 is going to hold, so it's kind of a tight trading range out there of about 20 cents, 73, 21 pennies out there. I know you want this for long-term trade and investment out here. I just offer the question, why? You're going to get more movement out of the Dow or the S&P or something like that. Those are the ones that have broken out. Those are the ones where the money is going and flowing. It's not flowing into AGNC. Folks, stay tuned. David White's up next. I'll be back with you on Terrific Tuesday. Thanks so much for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every